When you started the brokerage, or I guess when you got your broker license, was it with the intent of working with investors exclusively?
The broker that I was with at the time, he specialized in flipping. He actually had his own portfolio as well. So learning how he was flipping was part of that strategy for me. So we could do it with our own flips.
It is a long-term game, and you've got to, put in the work and expect it to take decades. And I think sometimes people think it's going to be quick, but realistically, if you want to build that real estate portfolio and business over time, it takes a while.
You've interviewed Gino in the past, Gino Barbaro, and so he was the first mastermind that I joined, and having that platform of experienced operators that you could learn from, and then the network of people that you could possibly partner with, that was huge for me. It was kind of, I'm a do-it-myself mentality with me and my husband on different things that we do. So that was a game changer for me.
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I am here with Christina Kovacs. Christina has a decade of experience in the real estate industry. She's built a career rooted in strategic investment, operational efficiency, and disciplined asset management. She's the broker owner of the home agency in Fort Lauderdale, Florida, since 2014. So, Christina, I'm gonna stop there because I think it's much better hearing the story from the guest. But first, thank you for being on the show. Thank you for coming back. We tried to do this once before, and I don't know, something went wrong on my internet. So, thank you so much for coming back. I'm very excited that we get to finally have the conversation.
Likewise, thanks for having me.
Absolutely. Tell us about yourself. Tell us about your background. Kind of give us the story.
Sure. So real estate came into my life with a live-in flip, which at the time I didn't know was a live-in flip. My husband and I bought a property with the full $55,100 we had to our name, and did a good job with renovations that we did on 0% interest credit cards, and just kept rolling that over. The market started going up. This is in 2009. So when we saw the market appreciating and saw there was some value to buy another property like that, and we liked the renovation process. That's what we started as our first live-in flip, and so we did that again to have the no capital gains after living somewhere for 2 years. So that's how it all started. Then I realized I wanted to get my real estate license because I liked all sides of the real estate aspects, from renovating to buying and selling, and then I joined a boutique brokerage that specialized in flipping, so I could learn more about that process, but also help clients. So since then, we got into our own flips, and then built a brokerage. Eventually, started my own brokerage, the home agency, in 2014, and then transitioned into multifamily in 2021. I went to my first conferences online. The beauty of the pandemic was you could really hone in on anything and everything. I had all the time in the world. So with those conferences, I learned about multifamily and scaling, and we had multiple short-term rentals in different states. We had different flips going on, a couple of different long-term rental houses as well, but just we're scattered, and it was not efficient. So when I learned about multifamily, that's when the light bulb went off and knew we had to transition to that. So we sold off some of our portfolio and started investing in multifamily. And initially I joined some masterminds to network and learn. And now today, investing primarily in Missouri, dabbled a little bit in some other states, but that's the primary area. And then still have the multifamily, the home agency, which is now also the multifamily agency here in South Florida.
Okay, cool. So, I mean, the live and flip thing, I think it's actually exactly how I started too, not necessarily on purpose, but it's a good way to kick off. And then you started the broker. So when you started the brokerage, or I guess when you got your broker license, was it with the intent of working with investors exclusively, or I think you mentioned the idea of working with other flippers. How did you approach that?
Yeah, so it was actually the broker that I was with at the time. He specialized in flipping. He actually had his own portfolio as well. So learning how he was flipping was part of that strategy for me. So we could do it with our own flips. So the primary reason was learning how to flip better, and also being able to buy and sell my own properties. That was the main objective. then it transformed into helping investors. And some of those investors I ended up partnering with on flips together later on. And some of those situations have now transformed into multifamily relationships. So
Nice.
everything has a domino effect, right? Like we put the things in place and then slowly you don't even know what's going to unfold, but something even bigger and better than you initially thought usually happens the more you keep putting those reps in and
Yeah.
meeting more people and learning along the way. So
Yeah. Yeah. No, and that's a great point. I guess I would add to that, so that was, I guess you started the brokerage in 2014, but you started this process in, I think it sounded like 2010. And now we're in 2026. So
yeah,
point is, yes, all of that stuff kind of snowballs on top of each other, and the relationships lead to other relationships, but also it is a long-term game, and you've got to, put in the work and expect it to take um, decades and that should be the expectation. I think sometimes people think it's going to be quick, but realistically, if you want to build that real estate portfolio and business over time, it takes a while. So you mentioned first flipping, you had short-term rentals, and then along with the brokerage, moved into multifamily. So what? Tell us a little bit about kind of that transition from into multifamily. It sounds like you were scattered, but how did you how did you get kind of shift gears there? I guess is what I should say.
yeah. I mean, the conference is to learn initially, and then I started interviewing some different masterminds that I wanted to be part of. And I know you've interviewed Gino in the past, Gino Barbaro, and so
Mhm.
he was the
Yeah,
first mastermind that I joined. And having that platform of experienced operators that you could learn from, and then the network of people that you could possibly partner with, that was huge for me because I really didn't network prior to joining any sort of networking group or mastermind. It was kind of I'm gonna do it myself mentality with me and my husband on different things that we do. So that was a game changer for me. So now everything I and put my mind towards or want to go after is that with a team mindset. And so nothing is solo or I'm gonna do it myself mentality only. So with multifamily, that's the only way I was able to get into multifamily in the first place was through these different partnerships that I built and created. So
yeah,
yeah, and so looking to always continuing to grow those relationships, and same thing, compound effect. You never know where that snowball is going to lead.
right, right. Yeah, I mean the relationship certainly will grow over time, and finding a mastermind community. Gino's great. He's been on the podcast twice now, so I always enjoy talking to him. I think he strikes me as someone who would be easy to learn from. Kind of the way he approaches it. I know he talks a lot about sort of the creative approach to real estate, and kind of thinking about it from different angles. But the partnership piece, how do I think when people work with a spouse, or maybe a family member or something, like someone that you have kind of a long-standing relationship outside of, whether it's business or real estate, how do you look at your partnerships and finding those, and making them effective with potentially new people that you're meeting along the way? How do you approach that?
Yeah, I mean, it definitely there's been some learning curves along the way to come with that.
Mhm.
The know, like, and trust is not enough. I know, and then trust and verify really should be verifying, and then you can start trusting more. So I
Right.
definitely recommend people doing your background checks right away. There's no point in also just a simple Google search sometimes will show things that maybe you don't align with this person like you thought you did, just from what you know from the outside. So deep dive into what those characteristics, those people, the core values that they have, and if you do align, because this is a marriage you're getting into essentially.
Yeah.
Most people want to have a long-term hold unless they're syndicating, then maybe 5 to 7 year hold. But a lot of these deals that I like to be part of are JV deals with 3 to 5 partners, and I want to hold them long term and have it be a generational wealth asset. So I want to have relationships with partners that when that phone rings, I look at it and I don't dread it. Like I want to pick it up because I
Yeah.
enjoy talking to them,
Yeah.
So as far as relationships goes, it goes beyond partnering within multifamily assets together too. I mean, I now do some private lending occasionally to people. And the only reason I do that is because I've gotten to know them over the years, and I know that they're going to succeed in what their business plan is. So and there's multiple different ways I diversified within real estate, but also my partnerships now. I'm much more trusting of partnering now that I have built these relationships, which, like we talked about in the very beginning of this, it all takes time. Nothing happens overnight, and so you have to start putting in those reps immediately, and then you can benefit from it later on.
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Yeah. The sort of to push on the partnership thing a little bit more. I mean, you mentioned background checks. So I think that there's probably some level of, I don't know what the right word is, but people are reluctant to do something like that. Like you hear about it from experienced people like yourself, and we have people on the podcast too that hear about, especially if you're an attorney, they're like, make sure you have an ironclad operating agreement that accounts for everything that could go wrong and all of this. Like I think my perception, both from myself and maybe from seeing other partnerships, is it almost feels like uncomfortable to bring those things up with someone.
Yeah. But if you don't do it now, you can have a harder conversation later.
Right.
It's just like you're just kicking the can down the road. So
Yeah.
just have it now. And I mean, also a big thing for me that I learned with partnerships, for me personally, I align really well with anyone who's been self-employed in the past. So if you've only strictly been W-2, we may not fully be aligned, but there's got to be a part. It's okay to have a W-2 person as a partner, but you have to make sure to have some other, for me, I have to have partners also on the team that are self-employed and have had that business experience and mentality, because it is two different beasts, and we are running a business. And I think that some people just look at it as just investment, passive opportunity, and don't fully understand the nuances of what goes in and out of running a multifamily, multi-million-dollar asset.
Yeah. No, I mean, you read my mind in that if you don't have those, somewhat uncomfortable conversations in the beginning, it's a whole lot more uncomfortable once you're already sort of tied together, because it is, I mean, it's a lot like a marriage. Only, I was going to say this. This wasn't going to sound good. I was about to say only worse. A marriage is fine. There's not. I don't mean it that way. I mean,
Right.
it's almost harder to get out of than a marriage, because you are still like connected via those assets, whatever you partnered on, whether real estate, a business, whatever it might be. With a marriage, it's almost like a marriage with kids, right? Like if you get a divorce from someone and you don't have kids, you can kind of just go away. But here, when there's kids involved or an asset involved in the partnership case, it does get a lot harder to figure out where that separation lies. And so having all of that kind of spelled out in the beginning, but also like you mentioned, it really just making sure that you're not just partnering with random people kind of off the bat, like build those relationships over time and be patient around it, I think is probably the key that I've realized.
I cringe when I see someone on Facebook or LinkedIn just saying I have a deal and I'm looking for a JV partner with this much. It's like, that's not how you find your partners. And if you see that, run, because who knows how many of the things that they're involved with, because all these different business things that they have in the past can trickle into your deal, possibly with their lawsuit that they might get entangled in or something. And most of us want to refi into agency, right? Well, agency's going to do their due diligence on you, and they're going to find things that maybe you didn't find before, and maybe then you can't refi, so all
Right.
these things are so important to make sure you get everything in order initially, so you don't have problems down the road. And also with you're talking about the operating agreements. Yes, it's good to have an ironclad one that is built, but some things in there that I wish I would have had on initially some of my partnerships were things like performance-based clauses, truly outlining everybody's role and expectations.
Yeah.
I think
Yeah.
that those sometimes get overlooked in the excitement of the deal and what's happening. And
Yeah.
we all have that hurrah, we just closed on this
Right.
deal, and then
Here we go.
yeah.
Yeah. It's well, and I mean, not to disparage the mentorship programs, but a lot of them were just based around just getting a deal closed. And so, like, how do you get that deal closed? Well, you find enough people that can raise enough capital together to make it happen. And so I think thankfully, people have probably come to realization of how that, some of those situations have created challenges for people. And
Absolutely.
you're I, again, completely agree that, like, having this stuff in there, performance-based clause. I think that the roles, the definition of roles is super important, because I actually think like your tendency is to partner with someone kind of like you, right? Like you like them, you get along, you have fun together, whatever it is. But like that might actually be very wrong from a business perspective, because if you have a partnership of, 2 or 3 or 4 people that are all good at the same thing, they have the same strengths, well, that's not, you don't need this 3 people that are good at the same thing. You need 3 people that are good at 3 very different aspects of the deal, especially with these multifamily deals, because they are bigger. You are running a multi-million-dollar business with each asset. And so your point is just, I think, such a good one, such an important thing for people to notice. And I think the relationship needs to be cultivated over time. Mm-hmm. But even still, like, this is, then it's okay, we've got this good relationship, but who's going to do what? Because, there may be aspects. It's easy. People are going to do the parts of the job that is they like, or it's fun or whatever, but there's going to be parts of every deal or project or whatever that maybe isn't, like, not a lot of people like bookkeeping, but guess what? Like, you need bookkeeping on these things. Like, you need to have definition, as you said, like, of what the roles will be. Right. When you say performance-based clause, what does that look like? How would you define that?
So it's something I'm still working out, but it's something I want to implement in future always, because it's something that didn't happen before. So I don't have the exact answer for that, but I see it being, if you don't perform the role and duty that you said you're going to do, then something happens with their equity. It could be diminished slowly, but I see it going like that, but I don't exactly have the answer for it, because it's just, I feel like everyone should live up to expectations that they initially said they were going to do. And if they don't, there's going to be consequences. And so I'm still working through that. But if anyone has any answers for that, reach out, because
please let us both know if there's if someone has solved that question. Well, and it sounds like you would be tying it to those defined roles. So having the roles defined first. I think the other thing to add to this would be the basically like the capital contribution piece of it. Like, what happens if a problem is encountered, and who's gonna put in money? How much money is there? Are there caps to that? Whatever, because it's just
or maybe in a JV situation, if one partner is picking up the slack of one partner who's not doing so well, then maybe they have to pay an asset management fee to that other person. Like, maybe there's something like that in there.
Right. Yeah. No, I like that idea. Some way of compensating the other
and having
the other
accountability.
parties. Yep. Yeah. It makes so much sense, and it you don't think about it until you have encountered a problem.
Sure.
Unfortunately, that's a lot of, it's like, it's why McDonald's coffee now has a giant label on the side that this coffee is hot. Like someone got burnt and there was a lawsuit, and they're like, oh, we better put this on here. So it's like you figure things out sometimes through trial and error. But I think you also can look to someone like yourself and listen. Like, okay, well, this is what she's suggesting. There's a reason for that. Perhaps I should implement that in my own work, in my own dealing.
And sometimes those problems are so good to have sometimes because you learn and grow from them. I wouldn't be the asset manager I am today if it wasn't for situations that happened in the past, so you really can prove not only to yourself, but to the other partners and what you are made of and what you can accomplish when you have to persevere,
Yep. No, I completely agree. You mentioned, like, now that you're I don't know if I'm stating this correctly, but it sounds like you're focused now more on JV type deals with long-term holds rather than kind of the syndication model where you have a few GPs, a bunch of investors, and the plan is to hold it for about 5 years. So am I correct in?
Yeah. Yep. I invest as an LP in many syndications, but I primarily have preferred to keep things small and tight knit with JV, so that limits what I'm buying. Right, like we're not buying more than $5 million typically acquisitions, so that's kind of the cap with that kind of deal for us. So, but not to outrule syndications in the future. I'm definitely open to it with the right deal, but just haven't done that. And I've done some coaching with Mauricio Raould with his elite syndicator, because I see that possibly being something happening in the future, but I want to be fully set up, which I am now because I did a year of coaching with him, for when that does happen. And I have my coaching coming directly from a syndication attorney, not a guru.
Right. He's a pretty good he's a pretty good asset to have, a pretty good someone who knows the industry very, very well. So that's a good mentor to have.
And that's when everyone gets into these different groups, it's important to also go with people that's truly they're the only profession, and you can get the generalized multifamily investing education is fine, but when you really start to grow in this space, you need to align yourself with the proper people. Yeah, and
I think it goes back to just what we talked about with complementary skill sets and partnerships and all that, like the vendors that you work with or the mentors that you work with, like these are also people that can sit in those seats. So it doesn't mean, when I say you want complementary skill sets, like some of those skill sets can be hired or can be, consultant type basis or something like that. So and frankly, those consultant roles or mentor roles, like those are easier to end. Like if they don't have actual ownership in whatever asset or deal you're a part of, that's, you can bring them in for a fee essentially. And it when you're starting out and you're like, I don't have that money, it's easier if I just partner with that person. It is easier to get the deal closed, but it's not easier, for the next 5-7 years that you might have that asset. So things to really think about as to how you structure these deals. You're a hands-on operator. You're not just, kind of, although you invest passively, that's not your main focus. What does that look like for you? How do you kind of spend your time and where's your focus at?
Yeah. So hands-on asset management. I have third-party property managers, and I also have partners who are my property managers. So the two are managed differently. I'll just focus on the third-party PM. With that situation, every single Monday, going through the software, seeing what's happening with maintenance, unit mix. Is it echoing for you?
It's not.
Okay.
Let me hear. Sometimes if I turn up mine, people seem to notice Go ahead. Hopefully that'll help.
We could just edit that out. But All right. So every Monday I go through it's Buildium that the third party uses it. So going through everything that's happening with, honestly, pretty much every resident. Just a quick glance of that, and then the maintenance, what's happening with the turns, what's happening with renewals that we put out there, setting pricing guidance for the upcoming ones. So I have to get this whole list of items, and then Tuesday shoot that off to the PM with all those lists of questions. Wednesday compile everything, send it out to the partners, and then Thursday, Friday, Saturday, Sunday we're just monitoring throughout. But with unit turns, we have actual video that we've taken of every single unit. Then we also every year have the property manager send us detailed inspection reports of each unit, even if it's been renewed. We have a full checklist of what's happening with what appliance has been installed and when the full paint was done. Every nuance of a unit turn is listed and what the date it was happened for that, even a garbage disposal when that was put in. So there's never a moment where we, like, why would that garbage disposal go out when we just replaced it in 9 months or however long ago? Like, we're on top of all these different things because I've had the experience when I first started of not tracking any of these items. And so it's easy to get double billed or things get overlooked. And so consistent tracking across the board on everything. So fully hands-on. Also with vendors, if the 3 quotes we get, if it's still too expensive, I'm personally going out there and finding a new vendor and working with that. So there's nothing that's passive at all about it. Leasing, if it's slow, I always have Zillow listings going. I always have Facebook ads going, and I'm forwarding those leads off to the property manager just to help, because they're managing, say, 1,000 other units. It's easy for them not to be able to give you 100% on everything, So there's times when you have to come in and help give it a leg up here and there. So.
Yeah. I mean, it's not their asset, really. It's they are managing the asset for you, but ultimately it's not theirs, and so they're not going to have the same level of attention to detail, and ultimately they're not going to have the same impact to them if it doesn't go well. So I think that you have got to be kind of very involved with that. What does your portfolio look like at this point?
We have in Kansas City, that there's 54 unit there, 43 unit in Springfield, Missouri, little 8-unit JV in Pennsylvania that cash flows so beautifully for the little 8-unit that can, and then RV park. So, and that's where I kind of went off. I had a little shiny object with the RV park, but focusing only on multifamily now, and then also a single family portfolio still. A few properties that just don't make any sense to sell. They just do so well. And
why Missouri? What do you like about that market? Because you're in Florida, right?
I'm in Florida. So found the right partners. That's the first thing that led me there. Went to go visit, like the market, research the market. There's huge population growth happening year over year. The job growth is good. The diversification of jobs is great. Rent growth has been consistently increasing, unlike other markets. It's affordable still compared to a lot of other markets. There's just a lot of different things. The same with Springfield. It's not as robust as Kansas City, but that's also, people are actually migrating from places like Kansas City to Springfield because it's gotten a little too busy for them, So the market in general, between Springfield and Kansas City, really love. And on the Kansas side too of Kansas City. So that area is really booming. So I've invested more as an LP on the Kansas side of things for development. So I diversify for cash flow on some options, or development, which takes a lot longer, but I see the growth there. So I'm okay having 100K sit there until I get that nice return later on after it's done. Right. So.
Right. Yeah. I mean, it's diversification of diversification is a very broad word. You can have diversification of asset class. You can have diversification of market. You can have diversification of strategy within the asset class, within the market. As you just mentioned, you can do new development. So new development, you're not going to get any money back for probably at least 2 years while it's being built. And so I think there's just certainly someone who's considering, I guess, whether active or passive investing, you want to understand kind of like, well, what is my goal? And maybe you need to diversify for both, because likely you're not going to have like a high cash flow asset that also appreciates a lot over time. Like they just kind of don't tend to go together. So you have to look at, okay, maybe I'm young and early in my career, I want a lot of growth. Maybe I'm at retirement end and I want safe, steady cash flow. Maybe it's somewhere in the middle. So I think just understanding what makes sense for you and your specific investment criteria and all of that. But what I'm hearing you say is you've diversified, and you said shiny object syndrome, but I think like ultimately, like there's a reason to sort of look at other asset classes as part of your portfolio. So I think it makes a lot of sense. So love that. Well, Christina, let me switch gears. I want to make sure I get to ask you the questions I ask every guest, and the first one is based on the show being Know Your Why. So what is your why? What's you've obviously had already a lot of success, had a bit of a evolution of what your real estate journey has looked like. So where do you stand now? What's your why? What's the driver behind this success?
Yeah. So, initially it really was just closing the next deal, making that large commission on a flip. And it really was the ego, the side of things that it felt good and it was awesome. And now as I've grown, and it transitioned more into lifestyle by design and having optionality. And then I had a baby, my daughter, who's turning a year in March, and it really all changed again. So it's all about her. I don't even exist. I just want to make and have a life for her that will just something I always dreamed of, sure. And I also want her to be so proud of us, and just that's the biggest why now. It's like just to build this life for her, and it's each asset that we get is a learning opportunity for her too in the future. I really hope that she's interested in this and she wants to learn. And financial literacy is already starting with the ABCs of business books, so we're hoping that she likes it. But it's so much more exciting now than it ever was before. And the little wins that come every now and then with a closing, and it means a lot less. Now it's just more about the big picture and where this is leading. So we're more intentional, I guess you could say.
Yeah, I can relate to that. It certainly was when my first kid was born. Everything changed. Literally everything changed. The way I view the world, the way I everything. Time horizons were much longer. Like, it was just all of a sudden a whole new and also a whole new level of responsibility and stress, but in a good way. And I agree, like just essentially setting things up for them that's the meaning of it once they're around. So that's amazing. When people hear this and they want to connect to you, what's the best way for them to reach out?
My ChristinaKovacs.com is great. It has everything linked there, and there's a Calendly link that I'd love to get on a call with, meet new people. You never know where one conversation might lead. So let's connect.
Awesome. We'll put that in the show notes so people can find you easily.
Excellent.
Thank you so much. As I said, you came back, so that was despite my technical issues we had last time. Thank you for coming back and being on the show. Love that you shared your story with us. Thank you for all that you shared with us today.
Absolutely. Thanks, Jason.
Absolutely. Folks listening, make sure you connect with Christina. Please like, rate, and review the show so we can get more great guests. And as always, thank you for listening. Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?